I don't really have the three. Okay. So, okay. So welcome everyone. So today I just want to give you some information about where we are today. Okay. So as we mentioned about the schedule. Okay. So we're supposed to. I think today we are in the week 11, right? So which is about time to begin with our second round of the presentation. Okay. So as I mentioned last time, the second presentation actually built on the foundation of the first one. Okay. So I think for the first one we have been through that together. Okay. So in the first group presentation, we want to focus on the company's financials and also the company's stock prices. Okay. And then in particular, we want to know what will be the connection, the linkage or correlation between those two variables, right? And then also we want to take the multinational perspective, right? To look at those two relationships, to think about, what other factors can affect these relationships, okay? And it could include the company strategy, okay? And that's why we start talking about, why the company want to go, multinational, right? In the beginning, okay? So, and also at what year, okay? Because the initial behavior actually kind of a good indicator, okay, about the company strategy. So if the company would like to become multinational because it wants to get close to its customer, right? Then like in the U.S., right? Then we will know in the future, right? You will have more connection with the U.S. For more collaboration. For example, when we talk about the TSMC, right? And TSMC has is quite famous for its advanced technology, right? And we know in the U.S., right? That's pretty much the hub of all the technologies, right? And now in today's world, right? So for the TSMC, it first go multinational by expanding its operation to USA, right? And then we later we observe that a lot of exports from the TSMC actually went to USA, right? So you can see the connection between the first multinational and the subsequent behavior of the same company, right? So I think this kind of motivate us to look at the company itself, okay? And because I want you to have a freedom to choose the company you like rather than assigning you to a couple companies maybe you have no idea, okay? And because sometimes I might by accident, right, assign you to like old school type of companies, and maybe you are the new generation, you are the AI generation, right? So you don't really like those old school type of firms, right? Then that would be a mismatch, right? So I think it's a good idea for you to find your own companies, right? And this kind of company does not have to be the company you have invested. It doesn't have to be that, right? It could be that you heard about a company because your friend, maybe your best friend, went to that company to work, right? Or you heard about a company on the newspaper, right? In either way, I mean, you have some impression about this company, then I think it's worthwhile for you to spend some time to study the company, right? And then to tell us more about it, right? Through the sharing activity, right? So, and then I mentioned that when you have the correlation coefficient to be 0.5 or above, that's ideal, right? And in reality, we saw that correlation could be going up to 0.9 or even higher, 0.96, right? That's possible. But then on the other end of the spectrum, you can see the correlation coefficient to be really low, right? It could be 0.1, right? That could happen. But then I think the key point I want to share with you is that for those companies with the high correlation, that means that you can just fix it on the EPS. As long as you can do a good work, good forecast on the earnings per share, you can pretty much predict what's gonna happen to the stock price, subsequently, okay? So you will save yourself a lot of work by studying those kind of homeworks, okay? But then it doesn't mean this is the must, because people have their preferences, right? Even though I tell you the TSMC has a correlation of 0.96, some of you might think, oh, that's too new, I don't like that, right? Oh, that's too expensive, I don't like that, okay? You would rather to work on something maybe you can afford. Maybe that is tied to your own industry that you have worked for in the past, or maybe you aspire to work for in the future, right? Maybe the IT is never part of your option, right? So that's possible, right? I mean, maybe you just like the food industry, right? I mean, that will require minimum AI component, right? So I think it's up to you. But then through those kind of sharing, you can notice that when you have lower correlation coefficient, then you will have to start doing a lot of homework, right? To look at, oh, is the AI trend coming up? Is they gonna shape or shape the industry? Is it gonna influence the stock price, right? And some of you might heard about people trying to do the technical analysis, right? I mean, when they look at the stock price, right? They have the annual average, they have the quarterly average, they have all kind of different, they even look at how much trade on a daily basis, right? So that happens when you have low correlation. You have to do a lot of work. And that's why I keep saying that people working in the Wall Street, they have not only one monitor, they have 6 monitors because they have to do a lot of work at the same time. So it becomes multitasking, okay? So basically the key takeaway is that if you want to have simpler task, okay, and then spend your time, on this kind of sophisticated homework, maybe a good way is to find the stock with the higher correlation between the EPS and stock prices. Okay, good. So this is topic that we're gonna we had done before, and then I think some of you because were absent last time, so we will pick up one or two people to wrap this up. Okay, and after this first presentation, we're gonna move for the second one. Okay, and as I mentioned earlier, the second one is actually built on the foundation of the first presentation. Okay, so what makes this second presentation interesting is that not only you look at the EPS and the stock price of a different company, but you also look at the debt ratios. Okay, and I mentioned that first of all, when we look at about what happened to the country level debt level, right? It seems to be really high. For example, like USA, right? It has people say they are really going through some economic recession, okay? And because they had the bubble, earlier, right? And also their debt level has been going over more than 100% of their GDP, right? So that's one thing. And second thing is we heard about what happened. We just get started.
Okay, sure. Yeah. So who's going to be the first presenter?
Yeah, I just for the sake of waiting for you, for some of you, I just want to give you some heads up on the purpose and objective of our second presentation. Okay, which is gonna happen soon. Okay. So in the second presentation, we're gonna look at the debt ratio, okay? And I mentioned about the U.S. debt ratio is booming, and also the Japanese, debt ratio is coming up, right? We know the Japanese debt ratio is about 200% of its GDP. So that's pretty big, okay? And I'm doing this kind of recap because I think we are doing the videotaping right now for me to do the lecture, okay? I think and how many people are we still waiting for? We're still waiting for Annie, right?
Him?
Came in Annie, okay. So okay, I just tell you some background information so we can,
That's
while
why
we are waiting for them.
presentation runs smoothly.
Yes, right. We don't have interruption. All right. So when we look at U.S. and Japan, right? They actually make the debt level and debt ratio and also the debt dollar amount important, right? And what this exercise trying to do is because I want you to think about what happened to the company, right? So let's look at the debt ratio on the firm level. So that's the idea, because when the company has a lot of debt, right? It means there will be a lot of interest expenses the company need to pay, right? So that's kind of worrisome to some companies, right? And that's also could be worrisome to some investors, because when the companies are paying a lot of interest, they have no extra cash to pay out the dividends. So that's kind of, and that some of the investors may not be happy because of that, right?
Also about insolvency, that may happen.
Exactly, and Victor is correct. So when the debt ratio is too high, then the insolvency becomes part of the issue on the radar, right? So then that's why that's why having an extension on the first presentation. In the second presentation, we're gonna look at how that ratio is gonna affect relationship between the EPS and the stock prices. Okay, so that's the idea. Okay, and not only we look at the debt ratios, but then we look at the company that is different from the first one. Okay, and because we know in Taiwan there are about 2,000 public listed companies, right? And in our class we have at most 10 people, right? So that means we have a large pool of companies to choose from that are at the same time public companies and also the multinational companies, right? Which means the company may have the operation overseas, right? So that's the main idea for the second presentation, okay? And I also highlight, we will also look at the ESG, okay? And ESG stands for environmental, social, and governance, okay? This is the new topic. This is a new theme for the research as well. So nowadays people, they are really interested in the ESG. And we know ESG will include the environmental, means that you want to protect the Mother Earth, okay? By reducing the waste, okay, to our fertile ground, right? Such as to reduce the waste water, or the garbage, those kind of stuff, right? And for the social, it means you need to have, you need to be good to your community and society, okay? And some companies, they do the donation, right, to the community to help the poor, okay? So the idea is that before, people think about the company is only for profits. But this kind of mindset changed since 2015, after the passage of the Paris Agreement. Because that agreement suggests that we only have one Mother Earth. if it is gone, then we have no choice but to move to Mars. Or if that's not successful, then that would be the end of the world, right? So that's the idea. So since then, people kind of switch the focus from pure profit to profit plus some good deed to the community or the society, okay? And also there are some research shows that if you have the money to invest in mutual funds, right? And imagine you have two choices. You have one choice that just give you the return, and then on the other hand, you have the the mutual fund that give you the return, the same amount of return, plus some ESG some ESG measures or contribution to the society. People actually like the second choice, okay? Because for the same $1, you can actually do more. So why don't you do that, right? So that's the idea. That's when people look at the ESG, okay? And for the G part, we are looking at a corporate governance, right? Normally it's measured by many things, but then one of the key things people look at is what's the proportion of female executives in the company, okay? We know before the ratio is low, but now people think about, oh, that's not right, because if the group is too homogeneous, right? Maybe they don't hear a different voice, and that's no good, right? Because when you try to make a decision, you want to hear different voices, right? So you want to hear the voice from the males, at the same time you want to hear the voices from the females, right? And the same idea, in a group of female groups, right? They also need to listen to different voices from the males, okay? So that's the idea, okay? And also in a lot of big institutions, they have some sort of DEI, the principle, means diversity, right? Equity and inclusion, okay? So and they actually implement this kind of principle in their hiring process, okay? Just means that when you hire people, you have to pay attention to the diversity of your hiring, okay? For example, in the school system, if you have all the people coming from Harvard, that's not good, according to the DEI, because it's too concentrated. Maybe they have their own mindset, and then they will treat non-Harvard people differently, and that's no good, right? And then if you have all the people from say Russia, that's bad idea as well, okay? So you want to have some diversity, okay? And it's the same idea when you have the board of directors that comprise all females. According to the DEI, that's no good as well, because maybe they don't pay attention to the working right of some groups, right? Because everything is good for the male, right? And they don't care for others. That's no good, okay? So according to the DEI, you need to have some people in higher places. And that's why when they make the policies, it becomes friendly to all the people, okay? So that's the idea, okay? So for the G, we actually are looking for the governance, the corporate governance. So you can come up with different measures, and I will encourage one of measure could be the female ratios in the company. And by that I mean female executives, female officers, female directors, or female independent directors, something like that, okay? So I put an or here because when I set up this homework assignments, I keep in mind that maybe there's a chance your company does not have ESG. So that's why I said or. But then I mentioned in day one, if your company has the ESG, then you should report the ESG, okay? And given today's financial reporting and practice nowadays, I think most of the large public companies would have ESG practices, okay? So the expectation here is just for you to share a couple things. First of all, what did you see the E behavior in this company? Okay. Second, what does the social behavior you see in this company? Third, what are the corporate governance behavior you see in this company? Okay. And out of those three behaviors, which one you think is number one? Which one the company does really good? And which one is number three? Which one, which behavior the company does the worst? Okay. And why do I say that? Because when you open up your palm, right? You can. Did you see all fingers are the same length?
No.
No, right? Some are longer, some are shorter. That's normal. So ESG comprise of three components: environment, social, and governance. They cannot be 100% at the same time. It's likely some will be 95%, some could be 90%, some could be 93%. Okay? And by the worst one, it doesn't mean it's failing, because the third one could be the third rung up could be just 90%, which is still high. Okay? But then I want to distinguish which one is best, which one is worst, out of the ESG three dimension or three pillars. Okay? Did you get it? Okay, so that's the idea. Alright? So given we have some people try to share the first presentation, I think we still have time for you to tidy up your sharing, including the ESG part, if you haven't done so. Alright? So this is the idea, okay? And when we set up the schedule, it's meant to be in the week 11, which is the May 7th, which happened to be today, okay? So I think because we are actually having an extension from the first presentation, and also we have this presentation building on the foundation of the first presentation, that is ESG and subprice. So I think it should be fine to do this exercise, all right? I think that's all I need to say. Okay, so how much time do I use for the video recording?
23 minutes. I think it's okay.
It's okay, right? Okay, good. All right, so let me just actually we can make up the other 7 minutes afterward. Okay.
Yes.
So how are we doing with the time? Good. I mean, do we have all the people here so far? Okay. So let me check. So last time we had the, I think everybody pretty much finished the presentation, right? And also so I think you upload the your video clip to the group.
Yes.
Did you all have a chance to see that? Not yet? Did you want to pray again? So did you guys see the video clip from Pri? No? No? Okay. So Pri, I think they haven't seen it. Did you want to play that? And then okay, and then you are, which group are you? You are in group 9, right? So group 8. Okay, so you'll be asking questions. Okay, Katie. Okay. to Miss John, right? Yeah. Okay. Yeah. So do you mind? Because I think they haven't seen it. Okay. Yeah. Or Katie, have you seen the video?
Not yet.
Not yet. Okay. So maybe you can. I think it's only 5 minutes, right? So I'll just play the video. Yeah. All right. So I know you have uploaded, but then they were busy. They haven't seen it. Okay. So Peter, are you okay with the ESG thing?
Yeah.
You are? Okay.
Yeah, because what I did is to gather rating from different different companies for assessing the ESG performance of the
Okay.
company, so as to get an index.
Good.
Yeah,
And do
that's
you
what I
know?
did. This is what I did for the papers that I have written for the ESG.
Okay.
Mm.
And do you know which one score higher
Mm.
for the company?
Usually, I think it's 0.3, 0.3, 0.3 for each. I think three of them are of equal importance.
I know, but then are you able to kind of narrow down which one is the best, which one's the worst?
Yeah.
Okay.
So also what I said is ESG just acts as a moderator. So the main concern of the investors is the EPS, right? The ESG is just a moderator. If the company do the ESG well, and then there will be a bonus. They will choose to they are willing to pay a premium
Okay.
for buying the shares of the company.
Good.
That's what I think.
Okay.
It's a moderator. The ESG doesn't change the slope.
Exactly.
Yeah.
And are you able to kind of describe a couple of like e-practices the company does?
Mm-hmm.
You do?
Yeah,
Okay.
yeah.
I think that it should be fun.
Yeah,
Okay.
just to give a couple of examples. So,
Yeah. And also, with me, are you able to describe the e-practices of the company you're representing?
You mean like last time?
No, I mean.
no,
this time.
your presentation.
Yeah. So, what exactly the environmental protection the company does?
Actually, I'm make it in like timeline for like environment and also like social. But for my part in the board, is that have like special situation for the government part. So I didn't mention about that.
Yeah. No, I mean because we are just waiting for her. So maybe
Mhm.
if you have information, you can.
Just
you can
like
add.
E, you mean the company has saved energy, right? Use how to recycle the things. So
Yeah,
that's
something
you get
about
the
the
E.
company try to recycle
Mm.
the carbon emissions,
Mm.
and they have recycle a lot of carbon emissions that is equivalent to the emission of of a forest, something like that.
As is what have you said before, is women engagement, the accident rate,
Yeah.
and also social engagement, how much money you have spent in the community.
Yeah.
Governance, that's like what you have said before about the board of directors.
Yeah.
So like compliance of the accounting practices, IFRS. something like
Yeah.
that.
So like what exactly the company did for its E, for its S, for its G.
Different aspects. Yeah, so to quote examples what the company has done.
Don't worry, we'll have a break. So you have
Uh,
you have enough time to edit
Yeah,
more.
you can find ask your good friend.
Yeah.
Prepare is AI. yeah, ask AI.
Don't worry, they have time. Don't
Yeah,
worry.
you have time to do the modification. It's
Yes.
fine.
Yeah. I'll give you a
Actually
break. I'll give you a
Yeah.
break. Yes. Yeah, when are we ready?
Can I start to play?
Yeah, you can just play. And Katie will ask questions.
Hello everyone, I'm Gona. Today I will talk about Taiwan CMOS. I want to study the relationship between EPS and stock price in the past 6 years. First, I will introduce the company, then I will analyze the data, and finally, I will explain the result using market environment, company transformation, and ESG. And this is my outlines. Taiwan CMOS was founded in 1946 and became provided in 1954. It is one of the oldest companies in Taiwan. In the past, it focused on cement and concrete, which is a traditional industry. It depends on construction and real estate. However, because of the environmental pressure and carbon issues, the company started to change. It is now moving from a steamer company to energy and sustainability. With both batteries, energy storage, and recycling. This transformation helps the company reduce risk and finding growth is. It is also selected as the one of the global 100 sustainable companies. And this slide shows data from 6 years. In 2020, EPS was very high and stock price was so high. In 2021, EPS went down but stock price went up because people believe in the company's future. In 2022, China's housing crisis caused demand to drop, so EPS and stock price both went down. In 2023 and 2024, EPS increased a little but stock price stayed weak. In 2025, EPS became negative and stock price dropped again. Overall, EPS and stock price moving the same direction, but sometimes they are different. And this chart shows EPS and stock price in a visual way. Most points go from the bottom left to the top right, which means positive relationship. When EPS is high, stock price also high. For example, 2020 and 2021 are in the upper area, and 2025 is in the lower area. But 2021 is a little different, which means the stock price is also affected by inflations on the EPS. And we use the Pearson correlation and get 0.9. This is very close to 1, so it means strong positive relationship. In the long term, stock price follows profits, but correlation is not causation. Stock price is not only affected by EPS. For example, in 2021, EPS went down but stock price went up because people believe in the company's future. So stock price reflects both current performance and future expectation. And now we look at the market environment and in more detail. The cement industry is a cyclical industry. It depends on real estate and construction. When the economy grows, people build more, demand increases, and profit goes up. When the economy is weak, demand goes down. Other important factor is China. Taiwan Cement had a large part of its revenue from China. In 2022, China's housing crisis caused demand to drop quickly. This reduced the EPS and stock price. So stock price is not only about the company, but also about the economy and global market. And the Taiwan Cement transformation is about facing future challenges. Cement is a high carbon industry with limited growth, so the company needs to change. In energy, it developed batteries and in energy storage. It because renewable energy needs storage. In recycling, it turns waste into resource using its possibility in low carbon material and reduced carbon in cement production. So the company upgrade its business to become more sustainable. And Taiwan cement changed its strategy from one main market to many markets. Before it depends on a lot on China, which create risk. So the company decided to hit Europe. Europe focused on sustainability and energy transition, which match the company's direction. That helps reduce risk and improve competitiveness. And in ESG, Taiwan Cement makes sustainability a core strategy. In development, it developed low carbon cement and green energy to reduce carbon and reach net zero. In social, it focused on fair transition, caring about workers and communities. In governance, it improves transparency and follows global strategy. So ESG is not only a responsibility, but also a company future's competitiveness. And next, I would like to talk about the Trinity Energy incident and how it affects TCC. Before explaining the events, let me briefly explain the relationship between Trinity Energy and TCC. Trinity Energy is a cross-subsidiary of TCC's transformation into an energy company. TCC owns more than 70% of it, and it focuses on battery and energy storage. In 2025, a fire occurred at its plants, causing a loss of about 16.4 billion NTD. The key issue is the insurance decision. The company reduced the insurance limit per accident from 15 billion to 3 billion. As a result, the insurance only covers 3 billion, and about 11 billion had to be paid by the company. This loss is a total that is almost wiped out TCC's entire profit in 2024. Because of this, EPS dropped it from 1.45 to minus 1.6, and the stock price fell from 32.8 to 26.4. And now the next question is, why is the incident particularly serious for TCC? Now, I will explain why the accident is especially serious, because it happened in the core of TCC's transformation. Trinity Energy represents future growth, so the impact is not only short-term profit. And second, it shows a risk management issue. The company reduced insurance coverage to save costs, but it increased the potential loss. And third and most important is the nature of the stock price drop. The decline is not only because of loss and or negative EPS, it is because the market is re-evaluate TCC's transformation. Investors used to believe in its future growth, but now they are less convinced. So the stock price reflects uncertainty about the future. In conclusion, this event not only wiped out 1 year of profit, but also with investor confidence in the company transformation.
Okay, yeah. So thanks for Ms. Zhong to bring us the sharing. So we just bring the time to the previous group, Katie, and to have about 20 seconds for asking questions.
Can you back to the slide EPS and stock launcher?
Oh, I can show my first.
Yes. Slide 5.
It's on.
Yes, yes. From 2020 to 2022, the EPS dropped sharply. So I want to know, even though the company was still expanding into energy and new infrastructure during that period, why did the EPS fall sharply?
可以讲中文吗？
Try to answer in English.
Oh, you want to know how come the EPS dropped sharply from 2024, 24. 2022, 2024? There are 2 critical years. How come the EPS dropped, right?
So the first 3 columns from 2020 to 2022, why they dropped sharply when the GCC will expand their business and new infrastructure.
Oh, 2023, right?
不行啦，我要用中文回答了。
this is English class.
Oh, how come the EPS dropped sharply? In the year you mentioned, right?
Yes,
2020.
2020 and 2022, it dropped from 4.3
3 to 3.3
to
to 0.74 is a drastic drop, right?
Yes.
Yeah, she wants to know what has happened. Yeah, how come? And I think it's actually about China because one of its major customers are in China, so you know what happened in China in those days, and then you know how come.
哦，因为2020，不行，我还是要讲中文。
I will transfer in English. Okay, you just.
那我就没有办法讲了。
你怎么会修这门课？
啊，没办法，一定要修2堂EMI的课。
他是this mandatory. Okay, they say try this and just try to in English.
Okay, because 2022 is COVID-19 and I think the economy is lower and maybe in China.
The property market is dropping.
Yes, the people.
You can do it. The major problem is
People
mainly
have
China.
okay.
and people have no money to purchase the house.
Also the infrastructure, because the economy of China is no good, and then cement is the raw material used for building highways or infrastructure. So China has no money to invest in the infrastructure. So that's why. And also the property market. And then you have to know that this stock can foretell it's cyclical. Why I say cyclical, and then people can also can, if people forecast the economy is the future prospect of the economy is no good, and then they'll make the decision to sell the stock of the company. So that's why.
So, question related about the previous questions here. From 2022 to 2024, it seems some recovery. So in 2025, I see a drop, and like the CCC has no money to pay for the investor, and maybe the number is less than the zero. So why?
Yeah, the drop in
Yeah.
2025. The reason, how, what happened? You can ask your good friend. You can ask your
So
good friend.
plus 4 to group 8.
Because of fire occurred at the battery plant in 2025.
Oh,
This one.
Trinity, right?
Yes.
Trinity is the subsidiary of the TCC.